On March 10, 2025, the stock market experienced a dramatic turn of events, and Tesla was at the center of the storm. It was a day that many investors in the electric vehicle giant would soon remember, but for all the wrong reasons. The stock, which had once been a symbol of innovation and market dominance, plunged by 15.4%, closing at $222.15 per share. This sharp drop came as a shock to many who had been betting on Tesla's growth in the rapidly evolving EV market. But what caused such a significant fall in Tesla's stock price? The beginning of the downturn. The story of Tesla's stock decline didn't start on March 10, 2025. In fact, it had been a turbulent few months for the company. Just a few months prior, in December 2024, Tesla's stock had been soaring, reaching an all-time high of $479.86 per share. It seemed like the company was on top of the world, with electric vehicles, EVs, becoming more popular, and Tesla continuing to dominate the market. However, as 2025 unfolded, things started to change. Elon Musk's distractions and controversies. The first blow came from none other than Elon Musk, Tesla's CEO. Musk, known for his bold and sometimes controversial statements, had been dividing his attention between Tesla and his other ventures. His involvement in politics, particularly his vocal support for certain political figures, began to alienate a segment of investors. While Musk was still a visionary, many felt that his focus was no longer entirely on Tesla. Musk's latest venture, the creation of a new space and satellite internet company, had raised eyebrows. Investors began questioning whether Musk's commitments to his other projects were distracting him from leading Tesla, the company that had made him a billionaire. While some supported Musk's vision, others worried that this distraction could affect Tesla's future performance, contributing to the stock's decline. Economic factors and market sentiment. Another critical factor influencing Tesla's stock price was the broader economic environment. The global stock market was in turmoil, and Tesla, like many tech stocks, wasn't immune to the impact. On March 10, 2025, major indices like the Nasdaq dropped by 4%, with the S&P 500 and Dow Jones also suffering significant losses. As a tech-heavy stock, Tesla's price was hit hard by the negative sentiment sweeping across the market. Investors became more cautious, fearing that rising interest rates, inflationary pressures, and the possibility of a global recession would slow down consumer spending. Electric vehicles, often seen as premium products, were particularly vulnerable in such an environment. Consumers were less inclined to spend on expensive cars when there was uncertainty about the economy's future. This dampened demand for Tesla's vehicles, which directly impacted its stock price. Increased competition in the EV market. Tesla had long enjoyed a dominant position in the electric vehicle market. However, as 2025 progressed, it faced increasing competition from both established automakers and new startups. Companies like Rivian and Lucid Motors, which had previously been seen as niche players, were now ramping up their production and improving their offerings. Traditional automakers like General Motors and Ford were also throwing their weight behind electric vehicles, launching competitive models at lower prices. For years, Tesla had been the leader in electric vehicles, but the growing number of competitors, along with new technologies and innovations coming from these companies, had started to erode its market share. Investors grew concerned that Tesla's once unassailable position was no longer guaranteed, which added to the negative sentiment surrounding its stock. Global trade and tariff concerns. In addition to these internal and market-specific factors, Tesla was also affected by the external environment. Trade tensions and tariffs between the U.S. and its major trade partners, particularly China and Europe, were casting a shadow over many tech companies. By the end of the trading day on March 10th, 2025, as a global manufacturer, Tesla's stock had fallen on international supply chains and markets. For many investors, the writing had been on the wall for some time. Any disruptions in trade relationships, but the scale of the drop still came on key materials could hurt Tesla's ability scrambling to reassess their forecasts. On March 10th, while Musk's social media followers and Tesla increasing concerns quick to voice their frustration and concern. A significant Despite this massive drop, vehicle production, Elon Musk took to social media for the company, offering a message of reassurance. This would directly support Tesla's bottom line. He wrote, and in the long run, its stock everything will be fine. But investors weren't so sure. The next few weeks would be critical for Tesla, and the company's future now appeared more uncertain than ever. Looking ahead, the events of March 10, 2025, were a stark reminder of how quickly fortunes can change in the stock market. Tesla, once the darling of Wall Street, now faced a future filled with challenges. Musk's distraction, the rise of competition, economic uncertainty, and global trade tensions had all conspired to bring down the company's stock price. Whether Tesla could regain its former glory, or if the stock would continue its downward spiral, remained to be seen. Investors, analysts, and even fans of the company would be watching closely, hoping that Musk's optimism would prove to be justified in the long run. What next?